Morning, Vuyo. We were just talking earlier on the show about the strength of the euro against the dollar in the context of more optimism in global markets about what's going to happen in Europe. So your thoughts on the euro and the dollar to start with?
Morning, David. Well, certainly you have seen some strength come back into the euro. A lot of it related to the decision that the ECB made a little while ago to resume its bond purchases. Then we've also had some statements, most notably from German Chancellor Merkel, who seem to be on board in terms of the ECB and plotting the way forward. So certainly as far as political developments are concerned, the euro is receiving some support from there, although the economy continues to remain a source of concern. So as far as we're concerned, we see this strength as being rather short term. We still maintain our bias or our view that euro-dollar exchange rate is going to head down to about 115 towards the end of this year, and that's because we just haven't yet seen a concrete political solution to the problems, and for all intents and purposes the EU economy remains very deep in kind of recessionary territory, although not technically in recession. The growth numbers are quite dismal, and so from that point of view we see further slippage in store for the euro in the coming months.
All right, and the rand in that context that you've just mentioned, 8.28, it's been around that level for a bit.
Yes, well, our bias or our view as far as the rand is concerned is certainly that it will still head to, we have a year-end fix of about 8.60, so we haven't amended our view as far as that's concerned. The rand has weakened considerably. I think the ghost of Marikana is hanging quite heavily over the rand at this point, in the lack of confidence that we're seeing investors. There's a huge sell-off in the bond market once that news broke last week, and so I think the rand is still suffering a bit of a hangover as far as that's concerned. But even removing that from the equation, South Africa's fundamentals certainly aren't supportive of a sustained rally in the currency, and so we're quite comfortable to maintain our view that the rand will depreciate quite slowly, and we maintain our year-end target of 8.60.
Right, and then indicators for this week that we've got coming out, indicators of economic activity, and reports are on it. The CPI due this morning.
Yes, absolutely. I think it's coming out in a few minutes. We're expecting the CPI to have moderated to about 5.2. I think that's broadly in line with market consensus. Of course, if we do get a print that is that low, we're certainly going to most likely see a resurgence in comments or expectations of further rate cut easing this year. That's not Standard Bank's base case scenario. We see rates flat for at least the next year. But of course, if we do get a succession of lower CPI prints in the coming months, that debate is certainly going to be invigorated again, especially as we head into next week when we have those all-important GDP numbers, and of course with strike activity, particularly in the mining sector, and evidence of slowing economic growth elsewhere. The combination of the CPI this week and GDP numbers next week is certainly likely to provoke quite a bit of debate, and could also then feed into some volatility on the local currency markets.